It is a big pleasure to have you join us on this episode of Tax Matters. I'm Chamaka Ohauchi, and I'll be your guide on this voyage into the world of education and enlightenment on taxation. Have you lately been approached by anyone posing as a consultant or concessionaire for the purpose of collecting taxes from you or your organization? Beware, you are dealing with an unauthorized individual. You are breaking the law, and such person and those who send them to you are breaking the law. In that regard, we have a public notice under the hand of Muhammad Nami, Executive Chairman, FIRS. The public notice goes thus. It has come to the notice of the Federal Inland Revenue Service that some ministries, departments, and agencies of government, MDAs, are appointing concessionaires or consultants for the assessment, collection, accounting, or enforcement of taxes and levies due to the federal government or any of its agencies. The service wishes to call the attention of the general public, particularly all MDAs, to Section 68, Subsection 2 of the FIRS Establishment Act 2007, which provides that the service shall be the primary agency of the federal government of Nigeria, responsible for the administration, assessment, collection, accounting, and enforcement of taxes and levies due to the federal government or any of its agencies. The public notice goes on to cite Section 12, Subsection 4 of the same Act, which provides that the FIRS may appoint and employ such consultants, including tax consultants or accountants and agents, to transact any business or to do any act required to be transacted or done in the execution of its functions under the Act, provided that such consultants shall not carry out duties of assessing and collecting tax or routine responsibilities of tax officials. Based on the above provisions of the law, it is clear that the duty of administration, assessment, collection, accounting, or enforcement of taxes and levies due to the federal government or any of its agencies is that of the Federal Inland Revenue Service and its tax officials. No part of these responsibilities can be contracted to a private enterprise by any other MDA. Furthermore, appointment or authorization of any person other than by the Federal Inland Revenue Service to assess, collect, enforce or account for taxes constitutes an offense under Section 68, Subsection 3 of the FIRS Establishment Act. Such appointment or authorization is punishable upon conviction with fine, imprisonment, or both under Section 68, Subsection 6 of the Act. In view of the foregoing, where any person, individual or corporate, has any information or assistance that may be of use to the service for the purpose of administration, assessment, collection, accounting, or enforcement of taxes and levies due to the federal government or any of its agencies, or for the performance of its duties under the FIRS Establishment Act, such person should approach the service directly with such useful information. To be forewarned is to be forearmed. Do not fall into the hands of charlatans.
It is an offense punishable by a fine of 10 million naira and or imprisonment for any agency of the federal government other than FIRS to demand for books or returns for the purposes of tax. It is also an offense to carry out the function of assessment, collection or enforcement of tax, or pay any portion of tax revenue to any person or into any account other than the relevant accounts designated by the Constitution or relevant laws of the National Assembly. It pays to pay your tax. This message is brought to you by the Federal Inland Revenue Service, FIRS.
Welcome once again as we launch into the Tax Law Clinic segment of today's episode. Having registered your company with the Corporate Affairs Commission and having been allocated a TIN, you are set for business. The program is Tax Matters, and so what we are doing is to bring you up to speed with what you need to do to fulfill your tax obligations. Today, we are going to talk about the most important step required to be taken by an entrepreneur: record keeping. It is imperative that you keep records of all transactions, purchases, sales, expenditures, everything. One of the most important departments in an organization is the Finance and Accounts Department. The Finance and Accounts Department must be up and running, must be up and doing in keeping records of all expenses, purchases, sales. This department is naturally headed by an accountant. However, if a company is micro, small, or medium, if a company is fledgling, it can do without a chartered accountant. You are allowed to start small by designating one of your staff as record keeper. You can begin, for example, by putting all receipts in an envelope marked for a month. So in January, all receipts, all vouchers, recharge cards, purchase of petrol for company runs are thrown into the envelope for the month. By the end of the month, you put away and open an envelope for February, and so on till the end of the year. For petty expenses, you need a cash register, which can be in the form of an exercise book or jotter. Or if you're one of the lucky ones, one of these from the Federal Inland Revenue Service. At the end of your accounting year, 12 months, you hand over all these along with your invoice booklets, receipt booklets, bank check stubs, and such other materials to a qualified chartered accountant. Yes, it is at this stage that you need a qualified chartered accountant to prepare your books and determine your financial statement for your accounting year end. The next step is for a qualified tax practitioner accredited by the CITN with license, seal, and stamp to determine the tax liabilities of your company for the purpose of paying company's income tax and, where applicable, other associated taxes. In conclusion, we reiterate that you can keep records by yourself at company level. We also wish to emphasize that chartered accountants and tax practitioners do not charge an arm and a leg, and that sometimes you will find persons who function in the two capacities in one practice or firm. Finally, do not try to navigate the field by yourself. Engage the services of qualified tax professionals. In the case of tax practitioners, a registered, qualified, and accredited tax practitioner, so accredited by the CITN and acknowledged by the FIRS. What needs to be done to convince Nigerians to voluntarily pay taxes?
So is to continue to create awareness that it pays to pay your tax, because it is from taxes that government is able to provide social welfare services, including health and education. And also even the infrastructure. Part of it is tax money that is being used. It's not everything that is from borrowing. Every country that grows and grows on a sustainable basis is growing on tax. It's not growing on borrowing. It's not growing on legacy of countries that will come and give donations to you. So every responsible citizen must pay its tax. And we've seen situations where citizens actually even come up to pay their taxes because they have seen what the tax revenues are being used for. Unfortunately for us, because Nigeria discovered oil some 50 years ago, we lost our focus on developing other aspects of the economy, which used to be the strength of the economy. And because this money from oil is coming without much work being done other than the operators in the oil and gas sector, and money is being distributed on a monthly basis to states. So it's almost, forgive my word, but it's almost like easy money. So people lost that discipline of being able to pay their taxes. And when you don't pay your tax, then you also lose the local standing to hold your local government chairman or even your state governor or your minister responsible for whatever it is that they're supposed to provide you in the form of service. When people pay their taxes, they pay more attention on how their tax revenues are being used, because they have a right. They feel they have contributed, and therefore they have a right to ask questions, to monitor what government is doing, to actually pay a lot of interest in what government is doing. So we hope that in continuously educating people, that people will pay their taxes, and also people will take up their civic responsibility in monitoring how their tax revenues are used.
The Honorable Minister of Finance, Budget and National Planning, there for you. In the wake of trending news about Nigeria having a revenue problem, especially when people complain about the debt stock of Nigeria, there has come an urgent need to chart ways for the country Nigeria to generate the much-needed revenue for infrastructural and human development. So how does Nigeria get out of the debt trap and raise revenue when it is now apparent that the large chunk of the population is impoverished? We have spoken to some members of the public, and very soon on this program, we will share with you their perspectives on this issue. But a few things have come out clearly. 1. The need to shift focus from direct taxes to indirect taxes. Value-added tax, stamp duty, electronic money transfer levy. 2. The need to bring in the very large chunk of informal sector operators into the tax net. And make no mistake about it, when we say informal sector, we are by no means referring to the uneducated or the poor business operator, because in many cases, very many of these informal sector operators sit on big money. Transport fleet owners, livestock dealers, traders, artisans, name it. At the 24th Annual Tax Conference held in Abuja in May 2022, taxing the informal sector came up strongly. Later on, in July, the Southwest Zonal Districts of the CITN held the 11th in the series of zonal tax conferences, and taxing the informal sector again came up with special focus on the use of technology in tackling the issue. We'll begin with the panel discussion on developing the informal sector to enhance economic growth and sustainable tax revenue generation, held at the 24th Annual Tax Conference. Mr. David Nzeku, former chairman, Anambra State Internal Revenue Service, was moderator of the session.
According to the IMF, the Nigerian informal sector accounts for 65% of the GDP of our country. The informal sector, as we all know, is a very critical sector when we talk about taxation, especially in developing countries such as Nigeria. And not just because of the size, but because of the very nature of this sector. Yeah, in many instances, if we try to categorize the people that fall under the informal sector, depending on who you ask, it will be the lowest of the people in the society, or uneducated people, people that are struggling, people that after doing whatever they couldn't find a job, they decide to set up business by themselves. But then the informal sector has been described as the sum of economic activities conducted outside the regulation of government. What is striking here is the word outside, the statement outside regulation of government. The informal sector comprises of individuals, including workers who are not registered by the state and who do not necessarily comply with legal obligations. People that do all manner of jobs, electricians and the rest of them, These are people we see as informal sectors. There are also urban professionals such as doctors, lawyers, architects, accountants, some of us here, including teachers that are also informal. And some workers, even those that establish large businesses, if you go to the market, businesses that run into millions and billions of naira that have chosen to remain informal. Maybe for the purpose of taxation, we need to look at informal to mean businesses not captured and transactions that are not captured. And those that are unregistered, who don't keep records and are elusive. The challenge, therefore, is how do we find these people and how do we formalize them? Questions agitating the minds of stakeholders are, should we even be taxing the informal sector? If we should, who should be taxed and how best should they be taxed? How do we ensure compliance? How do we administer the informal sector more effectively?
There was a panel of 4 to discuss the issue. Mr. Besi Ale, in the course of his sojourn in the taxation subsector, traversed 3 inter-revenue services: Lagos, Oyo, and Osun.
We need to situate informal sector properly so that we don't waste time and we don't pace in the wind. Okay, we must classify what is informal sector. Don't classify the trader in Alaba as part of informal sector, or the guy that sells gold in Wuse Market as part of informal sector, because we can trace him. He has element of formality in his business. Okay, so we can easily trace him. He buys forex, he travels. There are 1,000 ways by which you can trace him. Yes, and he's usually stationary. We can track him. Well, most of the people in the informal sector, they move around, right? They don't have means of tracing them seriously. So I think we need to understand that. And then with that, we'll be able to answer the question and then look at practically how do we deal with informal sector. Okay, yes, the argument has always been that don't let us tax them. Yes, leave informal sector alone. I can imagine some states, the kind of resources that we wasted on running after informal sector is better deployed to somewhere else. And you want to use the principle of optimality. Yes, 80% of my 20%, 20% of my 80%. What do? The person selling locust bean in Gbogon, the total package that she's holding is less than 2,005 per day. She goes home with less than 300 naira. How do you tax him? The question is that we have to move away from taxing and look at what do we get from him or her, rather than go by way of definition of taxation. And that's where we miss it. Because if you go by way of taxation, most of them will fall below the minimum. They will not even pay taxes. Do we get revenue from them? The argument has always been that let's leave them, don't tax them, because of the problem. Please, like I said, let us aggregate. Who are we dealing with? Not the market people, not my sister that said gold in Okiari. No. If the tax administrator has to, because of the fact that we tax administrators, we're always in a hurry, and there's pressure on us to generate revenue, we just go ahead and say, let's get something from the person. And we wrongly classify the person as informal sector, and we lose it. She imports things. However, the argument is let them pay. Why? Because they pay to their religious organizations, no matter how small. They pay to their own association, towns hall association, no matter how small. They also contribute. And let them have sense of belonging. If you don't pay revenue, if you don't pay tax, if you don't contribute to the state, how do you say you are part and parcel of the state? How do you say the governor has not delivered? How do you say the state has failed you? So these are the arguments for and against taxing them. And like I said, we need to please properly situate and analyze the informal sector. How do you collect money from them? We have to look at something else. Do we go for money from their trade. Yes, I have in Lagos. You go to Lagos, the market. The lady that moves people's goods from one point to the other, the alaro in the market, it gets paid. I mean, the local government collects money from her on daily basis. Ask Lagosians, they will tell you. You can't get your goods away from Gorodom or Okiari with the alaro. She pays something. So we should be focusing towards that. And let's leave the more complicated theories and strategy, right? And look at what is practicable.
Taxation as a fiscal policy tool of the government required simple process for easy compliance by the informal sector. Tax is effectively how government shares in the prosperity of its people and enterprises. The players in the informal sectors are very active on social media. We have them on Facebook, we have them on Twitter, we have them on Instagram, we have them on LinkedIn, and quite a number of them. The tax administrators in Nigeria need to leverage more on digital platform to bring more taxpayers to TaxNet for sustainable tax revenue generation. Digital process is more effective in capturing more taxpayers to TaxNet compared to manual process. Of course, we know we have the FRS tax promise is welcome. It's a welcome development, and we know that it's a good thing. This shows the beginning of digital transformation in Nigeria's tax system. However, this platform needs constant upgrade and constant improvement. Also, the state internal revenues, they need to embrace digital transformation, method for collection, and of course, payment of tax. It's not that the informal sectors are not paying tax. They are paying tax, but they are paying tax to what? To unorganized tax official. In conclusion, because of time, deployment of digital transformation in tax system is an important phenomenon for capturing players in the informal sector in any economy that's ready to succeed.
So if you look at the ILO definition, it says that informal sector refers to any person, any economic activity of any person or entity that is, whether in law or in practice, is not sufficiently covered by law or monitored by law and regulation. So when you look at the market women and people who sell things around, you can easily trace them. But there's a set of people who are making a lot of money and they're not under the tax net. And sometimes it's very easy to just feel that they're in the formal sector. We have this ongoing situation where you have a lot of young people doing IT, providing services to people in the UK, in the US, and they are paid in cryptocurrencies. They are paid through Western Union. So what happens? It doesn't record in the tax base. You can even call those remittances diaspora remittances. But meanwhile, these are monies earned from people residing in Nigeria. And now the question talks about data mechanisms, data gathering mechanisms. So how do we collate this data? Because it's very important. If you have data, you're able to do a lot of things. You're able to even come up with the best framework, best policies, regulation, because you're working with data. So the question is, what kind of data do we have? I'm aware we have a data mining department in FIRS under the Emerging Taxes Department. And in speaking to one of them, I hear that they are doing quite a lot. They have an algorithm developed by McKinsey, which they use to trace some of these people. So the people we are talking about now, this IT savvy people who are, providing services and collecting monies, those are the kind of people they can easily trace. And the truth about it is that if we're able to get those people into the tax nets, there's a lot of, revenue to be generated for the country. Because as he said, Prof said, the cost of even going after this market women is more than the amount you're going to get from them, if they're paying their taxes. So it's very good that we employ technology to really explore so many other areas where people are locking and you're not able to identify them. And apart from this department of the FIRS, I believe that there are other things that can be done. So for example, in Botswana, they have the block management system. And here, tax collectors move around from place to place, taking data from people, from market women, how much do you make in a day, what's your turnover, When they do that, they don't come and issue them presumptive tax. And then with that, these people, are challenged, like, oh no, I'm not earning up to this amount.
Like we said at the beginning, the term informal sector is not a one-term-fits-all. It does not refer to the poor, neither does it refer to the uneducated. Like the experts have said, the term refers to those outside government regulations and by extension, outside the tax net. Next episode, we will continue by sharing with you what the experts say with regard to the way forward. How do we tax operators in the informal sector? Or better still, how do we bring the informal sector operators into the formal sector? Thank you for watching. Make it a date with us next week on this same station, same day of the week and same time of the day. Bye for now.